Now we get to do a little mailbag. You are listening, by the way, to KBH Global Radio on the campus of Cal State Long Beach. Let's do a mailbag question. By the way, you can get involved in the mailbag in a number of different ways, but the easiest way is to go to our website, which is keepingitre.com. Top right-hand corner, a bunch of little pictures, Facebook, Twitter, email, all that way, all those things. Just get us a question. We'll read it on air and hopefully help you out a little bit. Okay, Sitar wants to know, how do I take over mortgage payments and have the mortgage moved to my name?
Basically trying to assume the loan.
I think they're trying to assume the loan. Is that something that's easy to do?
No, they have to qualify.
Yeah.
So it's basically you're refinancing it into your name.
It's like, but
to assume the loan, I think you can keep the terms and conditions.
Yeah, I think that's the key, right?
So,
if it's already been paid on for 5 years,
right? But you still have to qualify for it. It's the whole approval process. But I mean, income, assets, complete application.
So if someone was potentially going to get foreclosed on, can they get a like a co-signer to come in and assume the loan with them and join them with the loan to save the home?
If they're potentially going to be foreclosed on, then they've missed payments. There's an NOD.
Right. Well, I mean,
so they'd have to catch everything up.
If let's say their adjustable is going to kick in and they know they can't afford it on their own, but they got a family member who's going to come in and.
My question is, as the family member, why would I want to go in on a loan that's about to adjust?
Well, it might. What if maybe it's mom and kids want to come in because they don't want mom to lose the house?
Yeah, no, it's possible. Yeah, absolutely. I mean, you'd have to catch up all of the late payments and. Well,
that's a good sign.
There's a lot
actually,
of
you know what? You're going to have
it.
You're going to actually no,
there's guidelines in place for that.
Because you are still the primary borrower and you have probably a 60 to 90 day late on your mortgage payment, you're not going to get an approval on that.
So it's a complete takeover.
Because it's late within the last 12
Yeah, because you have mortgage lates within the last 12 months.
If you're not late, though, is that a stronger possibility?
Well, if you're not late,
then you're not.
Then you can refinance it and bring in a co-mortgager,
Okay. But here's the situation then, for
LTV.
Sitar, my mom is having some trouble, and I want to take over the loan totally. But she's already been paying for 15 years. I don't want to lose that. Can I assume that loan after 15 years and only have 15 years left to pay? Same price, same
loan terms as well.
Only certain loans can be assumed, and that's going to probably be in the note.
Loan terms.
Yeah, well, it's going to probably be on the note. So you'd have to check and see.
Because there are some
not
clauses.
all loans are assumable.
Yeah.
Not all loans are assumable.
Many of them aren't.
Conventional loans are not consumable. VA is consumable.
Assumable.
You want to consume it.
VA is assumable, and I think FHA is assumable. And
FHA is here's the main thing. There's a lot of them aren't, and you want to, like Scott said, look at the note because there are some clauses that say you cannot assume this loan. So you'll want to take a look at that.
It's called an acceleration clause.
Correct, and they're going to expect you to pay it all up and.
Yeah. That's a big thing with those subject twos. A lot of those late night TV investor scumbag types. Yeah, no. This used to be a big scam where people would say, people would basically say, sign over the title and we'll take over the loan. But realistically, if the lender ever found out. You would have a foreclosure, and this guy would own a home, and he's probably going to rent it out and collect rents until they come and take it. So,
wow,
yeah,
just another way to scam people.